As we look at the portfolio, we have over 1,300 properties. We see an opportunity through dispositions to generate capital and use that capital for an announced strategy regarding some deleveraging.
Joining me today is Weil, CEO of Global Net Lease. So, Mike, can you point to an aspect of your latest earnings report that you feel especially highlights Global Net Lease's broader strategy?
Well, I think there are two things that really jumped out at us that we were very focused on and see the long-term value. We did over 1.4 million square feet of new leasing in the quarter. The average term of the lease was a little over 10 years, and we expect that to generate about $17 million of annual NOI. And the other was we had announced a disposition plan for the year targeting $400 to $600 million. And through the first quarter, under pipeline and closed is about almost $550 million of that. So very quick pace to achieve those goals.
And what issues do you expect to be prioritizing at Global Net Lease over the short to medium term?
As we look at the portfolio, we have over 1,300 properties. We see an opportunity through dispositions to generate capital and use that capital for an announced strategy regarding some deleveraging. And as I said earlier, we've been able to do that rather quickly, and we continue to see the market very eager to acquire these assets that we're bringing to market because of the quality of the assets, the tenants, et cetera. So that's really the focus.
Great. So it's quite straightforward in terms of making these dispositions at the moment.
Yes, it has been. So obviously there's a lot of work behind it. We've really been looking at assets that we categorize as almost non-core. So these are shorter term leases. These are properties that may have a debt maturity over the next 1 to 3 years. So for us, they're opportunistic dispositions, but they're still quality dispositions. So we've been averaging between a 7 and 7.4% cap rate on the dispositions. So very valuable for the company and what we're looking to accomplish.
Great. And where do you see the greatest growth potential for the company in the second half of the year and into 25?
Well, leasing will be a big part of that for us as we continue to have a successful strategy, a very strong asset management platform at Global Net Lease. And the great thing about leasing is, of course, it generates NOI, which will drive earnings, which is something that we're focused on while we are executing on this disposition strategy. So we'll continue to see strength in the retail markets where most of this leasing occurs. Whether it's the second half of 24 or in 2025, we believe that there will be rate cuts, which of course will benefit all of us in the REIT space. We're, I think, all very, very much looking forward to that. But our business plan isn't solely dependent upon rate cuts. There's a lot that we are executing on and will continue. And of course, the debt pay down from these dispositions, not only are we looking to lower critical metrics like net debt to EBITDA, but we'll also lower our interest expense, which will generate a greater result for the company.
Great. Michael, anything else you wanted to add about what's going on at Global Net Lease right now?
Just a lot of hard work, very focused, on our 2024 guidance that we put out. A big part of that, as I said, is the disposition strategy, which we're executing on. But just the overall performance of the portfolio and the success in 2024, and we're looking forward to continuing that into the future years.